All right, so let's review. We'll do a quick review on Wednesday session, or a basic review of what's been happening into this week, and how is that carrying us on heading into Thursday, and specifically what we are looking for. Okay, so Sunday overnight. Okay, we gapped down under this range. Okay, so heading into this week, viewing the market from a 4-hour time frame, the market was stuck inside of this range, being 67.15 all the way up to 6900. So as long as the market remains here, it's consolidation to set off any bigger move. The market needs to break out of this range. Okay, so into Sunday afternoon open, the market gapped down. Sellers followed through on this on an intraday view and ultimately pushed the market to test a buy zone that was set at 65.81 into 66.21. Testing into, breaking the upper part of the zone and getting inside of the zone as we near the lower end. Buyers stepped in and pushed the market out of this buy zone, which is what got us long, and this set up a rally, getting the market back into 67.15. Okay, so getting into 67.15 on Monday session, the market even broke above 67.15 and placed the market back inside of this 4-hour range. Okay, so that's what's been happening here. Okay, so into Tuesday and Wednesday, we had an intraday range set from Monday's high at 68.18, and the lower pivot was set at 67.65. Okay, so after this rally, okay, you want to think of this like a runner. Okay, a guy's running uphill. He's sprinting so fast. That first sprint is always so fast. And then the runner gets tired. So what does he do? The runner starts to rest, okay? And that's what we saw Monday into Tuesday. The market was resting. And then the runner's like, you know what? I'm going to try it again. I'm going to try to run up the next hill. The runner explodes up. And as he explodes, he gets tired. He's like, you know what? Not yet. I'm still tired. So, our runner stayed tired and he stayed in a resting mode. And that's what the market's been doing. Okay? Into Wednesday's session, the market continued to stay inside of this range in a consolidation state. Okay, we saw several attempts intraday on sellers attempting to break down 67.65. But every attempt on looking under 67.65 was immediately bought right back over, putting the market back inside of our gray box. Okay, and this box was very important to us, is very important to us, because shows us the market's consolidating, and as long as the market's consolidating within this range, it allows us to see that the market's maintaining this strength here. It's holding this strength, and we're looking for a continuation higher. That was our plan. Okay, our bigger pivot was 68.54. Tuesday we barely got there. Right, and this remains our bigger breakout area for now. Okay, breaking out of this range, we're looking to put on a full expansion into the upper part of our 4-hour range at 6900. Okay, so going back into Wednesday session, Every dip under here has been bought right back up, break down, bought right back up, keeping the market in a resting state. Okay, but things have changed so far in this evening's session, and that's something that I got into on tonight's newsletter, is the market has finally washed back under 67.65. The only difference now, after 1, 2, 3, 4, 5, 6, 7, 8. You know what? Let's just say after 10 times of attempting to break down this level, the market so far in this evening's session has broken down under 67.65. The only difference from these other 10 times is that the market has now found follow through below 67.49, which is Wednesday's low, and pushing the market back into an area of interest. Okay, and this is a great example as well on why I don't chase breakdowns. As we saw, okay, we established our support, let's say here, 67.62. From here all the way to here, there were about 10 attempts on the sell side, or plus, even more, to break down this floor. Each time being met with buyers. Okay, that's a good example here on why I don't chase breakdowns. You can trade a breakdown 10 times, it's gonna fail. You're probably sitting in the negative, and even if you're catching the final actual breakdown, I'm not too sure on how you end up profitable on this move when all these moves up here have been didn't work out. So yeah, I trade traps. It's much easier to wait to see sellers crack it, and then we see buyers step in, putting the market right back over, and then we long that. It's a much easier trade. The market's trapping participants, I'm just throwing a random number, 9 out of 10 times. Okay, that's the market's job. That's what the market does. It's a professional at that, and it's much easier to take those trades and consider those trades, as they work most of the time, majority of the time. Okay, so back into what we're looking at into tomorrow is, we finally lost 67.65, and the only difference here is that sellers have followed under Wednesday's low, 67.49, pushing the market into this area of interest. So this is what I'm focused on into tomorrow. Now, why am I focused on that? Okay, and it takes us back to the 4-hour time frame. Okay, entering this week, remember, we were focused on 67.15 into 6900. The market gapped down, we picked up demand, and to set up the market to retest, and bulls even got us back inside of this range. And just as we saw, the market's just been chopping inside of a smaller time frame range the past 2 days. Okay, and the market has lost that smaller intraday range, which ultimately it has led the market down to test this bigger potential time frame support. Okay, so into Thursday, I believe it's very straightforward. As long as the market can defend 67.15, I'm keeping the outlook that the market is staying trapped from 67.15 into 6900. Okay, and of course holding above 67.15, I am leaning long. Okay, with the outlook that the market's remaining inside of this range. However, if the market slips under this range and can't reclaim back above, that puts bulls in a very difficult spot, because losing the lower end of this range sets up the market to test this buy zone down here. And if we lose this part of the range, we gotta stop all longs, okay? And there isn't really an area of interest up until the buy zone again, and reassess there. Okay, so that's a quick overview of what I'm looking at into tomorrow. My bad. Let me go back to this 4-hour time frame. Pop. All right. Now, what I am taking a look at is, we are at an area of interest. Can the market maintain inside of this 4-hour range? Okay, we do have the RSI, starting to hit oversold levels. I'm keeping an eye on that. Okay. If we look at the market from an intraday view, I have 67.15, which I pulled from that 4-hour time frame, and the lowest we want to see the market go is 66.98. Okay, which is a 15-minute time frame pivot that formed on Monday. That's where I'm getting the range. Okay. We broke above 66.98, came back, held that support, and launched us off from here. So, this is my first area of interest. If we can hold above 67.15, that's great. That sets us up to test 67.30, 67.49, retest. For the market to really look good and give us more confidence, we need to see the market back over 67.49, which puts a failed breakdown in play. Okay, remember, we lost 67.65, but the breakdown started under Wednesday's low. So if we can hold this area of interest, first we're looking to retest 67.49. For us to look better on the upside, we need to reclaim back over this level, okay, and give us more confidence on the long side. If we slip under 67.15, this puts 66.98 into play, and this is the lowest bulls want to go to keep any upside in play. The lowest. Under 66.98, I am stopping out any longs, okay, because 66.98 is the trigger that puts a sell into play, targeting all these levels. Okay, purple levels I'm interested in: 66.41, which is Monday's cash low; 66.12, it was a pivot that we recovered. It's where I advise to get long. Okay, below there is 65.81. Okay, so if we spike under 66.98, like I said, avoid longs. But spiking under 66.98 and then the market can reclaim back over, that is a better signal. So, watch that. Let's see what comes into play tomorrow. Like I said, I think it's very straightforward. If we're looking at this 1-hour time frame, the market lost this little range, and all it has done is has to put expansion into the 4-hour time frame, possible lower end of the range. Okay, now question is can we hold here? If we can hold here, then we know that at least on the bigger time frames, the market's holding inside of this 4-hour range and gives us opportunity to long. Okay, but if we lose and we slip out of this range, it puts us up to test this buy zone again. So that's what we got. Let's see.